Hi viewers, welcome to our channel RJ's Info. This video covers Excel based accounting and operation sheet for gold loan accounting, especially for non-banking financial companies, how it operates and how it is accounted. You can able to download this Excel file for demo and you can do for practice. First sheet is covers the details of customers, on which date loan is taken, customer ID, name, loan ID. Loan ID, it sends whether it is EMI based or only interest payment based, that can be identified based on loan ID, and weight and gold value. It depends on market price. 80% of market price can be given as a loan. It depends on company to company. And interest rate, how many months, last due date and maturity date. This is general one. And particular date, how much outstanding is there. Status. One is active, still pending is there, EMI is pending, and closed means everything is closed. Overdue means some default is happened. Auction means customers not able to pay the amount, that is why gold is auctioned. The details should be derived from detailed information from customer. These are the monthly recovery from customer. Step by step it is given, so you can able to understand. This is date of loan issued, customer ID and name, loan ID, how much loan is granted. EMI calculation is very simple. I just make it round. So 15 and divided by 12 months and 12 EMI payments and 1 lakh. So it has come. So this is the interest amount. Interest also I have calculated. You can able to see the Excel sheet. You can able to understand it. Initially principal will be very less. Interest will be very high. So based on due date, everything is calculated. If the loan is paid within that due date, there won't be any penalty, right? If there is any penalty, calculation is done. On pro rata basis, penalty is calculated at the rate of 2 on EMI. Closing balance after payment of EMI. This should be linked with a hyperlinked with a status report, so that you can able to click it, so that it will go here. Branch account, how much cash is in hand, loans issued. You have to see individual customer, you have to consolidate and you can put it. Interest also you have to consolidate every transaction, based on that you have to put it. How much loan repayment, expenses. Net surplus will be like interest earned plus loan repayment minus expenses. Audit, auditor, he will do the auditing work. He has to give some observation. If any payment is due for a long time, then there will be some report, customer ID and loan delays. He has to mention how it is maintained in NBFC, so that you can able to understand how it works, how the interest is calculated. If you like this video, please share it, comment it, please do subscribe for upcoming videos. Thank you.